Well, hello there, speculators. It's Rod with Futures on Fire. Welcome back to the channel. Futures on Fire, part of TDG, the Traders Dev Group, where we provide education and trading strategies for active futures traders and self-directed investors across all instruments and markets. Hey, guess what? While we were all focused on the election this week, and it provided tremendous opportunity for us in the futures markets, what a great week we had on our pro trading room at TDG. A little other trading event happened, which was the new Market Wizards book came out. Unknown Market Wizards released on November 3rd. If you've been under a rock and have not read any books about trading, the Market Wizard series of books, which are interviews with very, very successful traders from all types of backgrounds, trading all types of things. I think the first book came out maybe 30 years ago or something like that. Then you definitely want to pick up those first two Market Wizards and probably check out this last one. Another book that's kind of required reading is called Reminiscence of a Stock Operator. That's another one that you might consider picking up and putting on your bookshelf, if you will. I happen to download the digital version of this, and I also got the audiobook. So I started kind of reading it and listened to a little bit of it. I'm probably about only a fifth of the way through. But the reason I wanted to make this video tonight is because this latest version, as well as the other Market Wizards books, actually just reinforces a topic that I talk about all the time, and it's probably near and dear to your heart if you're listening to this video and you're here at Futures on Fire, which is the benefits of futures trading. Okay, so if we look over on the table of contents here, it's kind of equally split between futures traders and stock traders. He actually starts the book out with futures traders, and if you go through the acknowledgments here at the bottom, right here, where it just starts out, the returns of the futures traders they just leave the stock traders in the dust in terms of what the returns are. Now, it's not all about spectacular returns and things of that nature, although that's the factor that that Jack is looking for here. So one to highlight right here is potentially, I don't think I can actually highlight it because it's like a little preview thing here, but I'll zoom in on it when I do a little post-production here. Futures trader who over a 13-year career has averaged 337% per year without any drawdowns exceeding 10% after his first trading year. A futures trader who made and lost over $500,000 twice before developing A futures trader who has averaged a return of 280% per year with an end-of-month maximum drawdown of only 11%. Okay, so what is the reason that people can put up these types of returns with the futures markets? Well, it's one word, it's leverage, right? And leverage is a scary word. It cuts both ways. The over levering has been the reason for the downfall of many a trader. But as I talk about here on the channel all the time, something you may want to consider, and by the way, you're already here at Futures on Fire. If you're new to the channel, why don't you smash that like button, hit the little subscribe and the notification bell to be notified next time I trade, so you can continue to hear me pound the table, boom, 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 pound the table on the benefits of futures trading to learn how to actively trade. Now, whether you stick around and that's your entire portfolio focus, that's really up to you. But if you are struggling in any way with trading stocks or options or Forex or crypto or really anything else, there are some differences around the futures markets that make them very unique and a great way to learn how to trade. And then, of course, you can see at the very outlier high end the kinds of returns that are possible with these professional futures traders versus them just basically stomping on the stock traders. Okay, most big stock portfolios and investing styles are really just hedge funds, and they operate at a completely different scale because equities, stocks, are actually very capital inefficient, whereas the leverage is available in the futures markets, when used properly, can lead to this type of return. Over here, I'll put a link below this video to an article that I just found on the Kelly Criterion. If you're not familiar with it, that's how to apply a very famous betting formula to both investment and trading and portfolio management. And if you don't want to read the whole thing, I won't bore you with it. You've probably already heard this. It's about as simple as possible, but there's a lot of great charts in here that will, that will show you that the optimal use of the proper leverage relative to the proper risk per trade, which ends up being right around 1.8%, a little less, is going to give you the most optimal potential sweet spot in terms of returns versus risk. Now, you are not going to put up 300% returns following the Kelly criterion with only 11% drawdowns. I haven't gotten to that particular guy or gal. I don't know who that is. I'll be very interested to hear that. I personally have had a lot of success on the upside while still protecting my downside, but my drawdowns were far greater at times than 11% for those types of returns. But anyhow, the Kelly criterion is going to tell you how to potentially, so you can see you have bet size relative to your win rate, relative to a number of other factors that you can look at here. If you're geeky, you can look at the actual math, but what it does take into account is actually the leverage that you're using relative to your account size, relative to the amount you're actually going to bet. Without getting too much off of this topic tonight, which is just taking a look at the Market Wizard's new book and why I think it really reinforces a lot of the benefits of the futures trading, I do want to come up here to, there's one sentence in here that just points this out perfectly, which is, there are two cardinal problems in investing, trading, or professional gambling are finding a set of profitable opportunities. Okay, I actually don't think that's much of an issue. Finding trading strategy with edge is actually not that difficult. This is the one, sizing your investments or bets. Most professional traders agree that the second problem is the more difficult of the two. All right, so again, using leverage properly and understanding when to be bigger in particular situations actually can help you hone this whole equation of understanding how to size your investments and your bets, because a lot of the time you can use the inherent leverage in the futures contract as opposed to sizing up the actual contract as a way to take advantage of opportunities when the time is right. All right, getting back to unknown market wizards here, I think the second topic that again, I haven't only a fifth of the way through the book, but what I'm going to do is just project on it. Again, I have no idea if any of the traders say these types of things, but I would suspect that most of the futures traders are probably very technically based. Okay, and one thing you'll hear very often about trading strategies is technical versus, God, always when I'm doing something is when people start to hit me up on Skype. Anyway, lost my train of thought there. Oh yeah, technicals. Okay, so the age-old battle between technicals and fundamentals. One of the things that's great about commodities and futures markets, specifically the futures markets that are stock index futures or bonds, things that don't necessarily have any real inputs or supply and demand factors to them in terms of an actual commodity like something like oil, is that they really, really, really respect technicals, and you get 23 hours of data to work with. The stock market's only open about 6.5 hours a day, and it gaps all over the place very often, making the technicals a little bit more difficult to work off of. Also, what do we deal with when we're dealing with stocks? We deal with earnings, we deal with news, we deal with management, we deal with product-related things. There can be legal situations. All kinds of things can affect an actual stock price, right? Which can create, again, jumps in the market that are not really well foreseen via the technicals, where when you come to the futures markets, and again specifically things like stock index futures, Dow Jones, S&P, NASDAQ, Russell, the DAX, the Nikkei, things like that are tracking broad stock indices that are made up of 30 to thousands of different stocks at a time. You don't have to be concerned with any of those things, and again, the technicals work out a lot better. So I hope I will be proven right that most of these futures traders are trading based off technicals and not fundamental inputs, although maybe there is a grain trader or something in there, we will see, that's trading the futures markets. Anyhow, the key to the success and the reason these types of traders are in this book: number one, proper use of leverage and bet sizing using something like the Kelly criterion, or understanding that risk actually comes first in order to put up great returns. And number two is using technical analysis in markets that lend themselves well to it. The third thing, and let me just come over to something that makes this video a little more interesting to look at than a book, than the text of the book. By the way, this cover here, wow, kind of looks like it, I don't know, came out in the 50s or something. I'm not sure that graphics designers, but no one buys books anymore anyway, right? We just download them and read them on our Kindle, or in my case, I did both. I actually downloaded it and got the Audible copy of it. All right, but the third reason I think you're going to find the futures traders in here are extremely interesting, as well as the whole book's probably going to be good, but just in terms of the benefits of futures, is specialization. Okay, so one of the drawbacks I find to actively day trading stocks and equities is you have to find things that are moving. I talk about this topic all the time. And when you're constantly jumping from one ticker to another ticker and you're like, well, it's a borrowed data is a borrowed data and a ticker is a ticker, it doesn't really give you the opportunity to specialize on anything. You're looking at a watch list all the time. You're looking at news. You're trying to decipher which equities you should actually be trading. Whereas futures traders can just go in and specialize sometimes in just one product or instrument. Okay, one market, maybe stock index futures, one product, something like the S&P 500, and can not only earn a living, but can put up tremendous, massive returns because of the leverage, because of the liquidity, and because of the specialization. All right. So, remains to be seen if any of the topics I'm talking about why I really dig the futures markets and think that more traders would benefit from learning more about them. Let's see if any of that stuff is reinforced in the latest version of the Market Wizards series books, which is out on the bookshelves now, as they would say, virtually. Unknown Market Wizards. I'll give a final review of the book once I'm done with it, probably within a week or two. But for now, that's it. So leverage, technicals because of 23-hour markets, and and the ability to specialize, I think, is the reason that we found 6 or 7 of these 12 or 13 traders that are highlighted here in the book happen to trade the futures markets. All right, if you found benefit from this video and you want to find out more about how trading futures for active daily income is the way to go, hit the like button, the subscribe after that, and then turn on the little bell notification. You'll be notified the next time that we broadcast. I'm going to do my best to put out about 3 videos per week, so there should be a lot of content coming your way. That's it for tonight. My name is Rod with TDG and Futures on Fire, reminding you to stay green and trade like you mean it. Thanks.